What is up everybody, Gifford here and welcome back to another stock market video, and today we're going to talk about a stock that I trade in, which is AMC. So this video is a little bit different because even though I own and trade in the stock, I'm going to show you all the bad things of why this stock is very risky and you should know what you're getting into when you invest in a speculative stock. We're now going to head over to TIKR Terminal and have a look at its financials. So for those that don't know how to go to TIKR Terminal to get this free website, you just type in TIKR Terminal, hit enter, and then it should be the first one there, and then obviously you go to sign up. You then have to create an account. Don't worry, it's totally free, and once you do all the login, then you'll be able to access the free information that I go over here. So let's now type in AMC stock and it comes up there. So it brings up AMC Entertainment Holdings, and the first thing we want to get into is go to financials, and then we want to go to cash flow statement. Let's have a look at the free cash flow. So we can see here that the free cash flow of AMC for the last trailing 12 months is minus $719 million. So this company is making no money from running as a business because of the economy, and it's only now that people have started to go back to the movies. So the business has to ramp up back again to generate revenue and then start making money. So remembering that these values are in the millions and that the brackets there and it's in red indicates that it's a negative value. So that's $719 million. And going back over a few years, you can see that they haven't been able to make money except for a time in 2019 where they actually were generating positive cash flow. For those that want a reminder why positive free cash flow is very important, so we got the definition here, which is free cash flow represents the cash a company generates after accounting for the cash outflows to support operations and maintaining its capital assets. Unlike earnings or net income, free cash flow is a measure of profitability that excludes the non-cash expenses of the income statement and includes spending on equipment and assets as well as changes in working capital from the balance sheet. So essentially when you are investing in a company, you really want them to be making money. That's the reason why you're investing your money in there, so they make more money and eventually they give it back to the shareholder by the company's own stock price increasing in value, or they give it back to you in other ways like some companies will do dividends, whatnot. So let's now move on to the income statement and let's go straight to the revenues of the company, and we can see here that AMC the last 5 years, so this one here is 2017, so that's $4.7 billion in revenue. 2018 was $5 billion. Remember, it's 5,000 but it's in the millions, so therefore it's 5 billion. And then in 2019 it was 5 billion again, and then we see that there's been a decrease of 1 billion, but remembering this was during the pandemic, and we see that as they're opening up, they doubled that revenue to $2.2 billion. And what this tells me is that they got heavily impacted by the pandemic and they're now trying to get back into getting their pre-pandemic revenue, but as you can see here, it doesn't seem to be growing quite a lot, which is a concerning thing with this company. So if you were to compare this to say like a tech company where they would be bringing out a product that might sell lots and that product sells so much that it increases the revenue by 20%, this is just not something that AMC has. And they have movie theaters, so in order for them to do that, they would need to open up more chains to then bring in that more revenue or bring other products. So I am comparing it to a tech company, but all I'm saying is that for them to increase their revenue is quite a difficult path because they would then need to open up new stores and acquire new leases and buildings and whatnot. So just to summarize what we've been going over, AMC isn't profitable, and that's one of the biggest risks it has. It's like a person that gets into debt each week and doesn't save any money. They do have a job, but they spend all their cash, which is not good. So they're burning money each week. And this is why it's very important that if you are investing in the company for long term, and if you're thinking if it's a solid investment, you have to look through their financial statements, because this will really tell you the health of the company financially and if they're actually going to end up going bankrupt, which means that the share price will go down to zero. So the next bad points that they have is the share issuance, which is another form of dilution, and also their stock-based compensation, which is another form of dilution. So all these are pretty negative, and then what we'll do after that is we'll have a look at simply Wall Street summary of the company. Back over to TIKR Terminal, let's have a look at the stock issuance. We can find that under financials and then go to cash flow statements and scroll down here, cash from investing, and then right here, issuance of common stock. So what this means is that they issued 1,219 shares of common stock, which means another form of dilution. Now remember, it's not 1,000 because we've got to multiply it into millions. So if that is millions and then that's a billion. So basically in the last 12 months, they've issued 1.2 billion shares extra into AMC. That means that they've diluted the other shareholders effectively. And going over to the stock-based compensation, we can see here stock-based compensation, and that the last 12 months again, they've issued 44 million shares extra to either the management or other parties in the company, and therefore again other shareholders have been diluted. So effectively this is not adding value to the other shareholders, and your piece of the pie is just getting smaller. So we're now over at AMC stock and Simply Wall Street, and let's just have a recap of what's going on. So the current share price that it last traded in was $15.50, and the market cap is $8 billion. And under the stock overview, the revenue is forecasted to grow by 10%, and the risk that they have outlined here is negative shareholder equity, also currently unprofitable and not forecasted to become profitable over the next 3 years. And we saw that of their revenues not increasing and coming back from the pandemic, and volatile share price over the last 3 months. And you can see here the last 5 years share price has been all over the place. And if you're wondering what this big bump here is, it's because of a short squeeze, and it's still the current play right now, and is one of the reasons why that I'll talk about later on why I'm invested in the stock. So if we have a look at the valuation here of AMC, you can see that it scores 6 red crosses, and that's basically because it is unprofitable. And one of the value metrics I like to look at is PE, and obviously because AMC is unprofitable, then you don't get a positive PE. Therefore they've got it here as minus 7.7, but if it's unprofitable, it's not going to be looking any good. And a big one for me that Simply Wall Street does a really good job of is simplify the financial position of the company. And you can see here that the short-term liabilities are not very good, and the long-term liabilities are not very good either, which means this has a high chance, more than other companies that make money, of going bankrupt. Obviously it's not going bankrupt anytime soon. They're still generating revenue and getting back up to the previous years that they've been to, but you can just see here the company is in a lot of debt. So yeah, they are the bad points of AMC stock, and financially they are in a bit of trouble. However, I trade in AMC for different reasons, and that's because the stock is heavily shorted and manipulated. I also trade in AMC with options trading to generate income. Because of that volatility, I do earn a lot of premium from it, although overall I haven't actually made money from AMC, but that's a different story. I currently hold over 50 shares for the short squeeze, and that's one of the things that people are expecting from the stock, and calling it the MOAS, which is the mother of all short squeezes. However, how I trade AMC is for another video and not this one. So in short, I am pretty transparent with my trades, and I do show me buying options in AMC, and I just want to make sure that you guys are quite clear how risky this company is, and those are its financial metrics. So if it goes bankrupt, don't be surprised. Well, that's enough for me today. Thank you so much for watching. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Before you go, help me out and hit that like button, and if you like this kind of content, feel free to subscribe. Also, if you want to hear from me midweek, you can hit me up over here on Instagram. As always, safe investing, and make sure you do your own due diligence, as I am not a financial advisor. Drop me a comment of what you think about AMC stock. May the gains be with you, and I will see you in the next one.